So Albertsons just dropped its third quarter earnings. And, at first glance, things looked pretty good. They actually beat profit expectations. But here's the kicker. The stock immediately tanked, falling nearly 6%. So what gives? What did the market see that the headlines didn't? Let's unpack that disconnect.
All right, here's how we're going to break this all down. First, we'll dive into those conflicting earnings numbers, the paradox of it all. Then, we'll get into the really ambitious AI story management is telling everyone. After that, we'll flip the script and look at what's actually worrying investors, see how the stock has paid the price for it, and then we'll wrap it all up with our take on what to watch for next.
Okay, so here's the central puzzle from this quarter's report. You've got a company, Albertsons, that delivered more profit than anyone expected. Great, right? But at the same time, they sold less than expected. That created this real conflict, and the market, well, it very clearly decided that the sales miss was the more important part of the story.
And here are the hard numbers behind that conflict. On one hand, adjusted earnings per share came in at 72 cents. That's a solid beat, 4 cents higher than Wall Street was looking for. But on the other hand, you have revenue at $19.12 billion, which was about $56 million short of the target. So a clear win on profit, but a definite miss on sales.
And what was the result of all this? The stock took a nosedive, closing down almost 6%. That's the reaction we really need to dig into. Why would a relatively small miss on sales have such a huge impact, completely overshadowing the genuinely good news on the profit side?
To find that answer, let's first listen to the story management was telling on their earnings call. See, they didn't really dwell on that revenue miss. Instead, they painted a much bigger picture. A vision of a company being totally transformed from the ground up by technology.
And the CEO, Susan Morris, she didn't mince words. She was basically saying, hey, Wall Street, you're missing the point. She's arguing that the market is completely undervaluing the deep, fundamental changes they're making to build a stronger, more profitable company for the long haul. This is management's whole thesis.
And look, this isn't just some fluffy, futuristic talk. They're actually doing it. They're partnering with the big dogs in tech, Google, OpenAI, Databricks, and they're already seeing results. They have this tool called Ask AI that's lifting customer basket sizes by about 10%. This whole tech push is being supercharged by incredible digital growth and a massive loyalty program, all aimed at a huge productivity goal of $1.5 billion.
But, and this is a big but, investors weren't really focused on that 3-year vision. Nope, they were focused on the next 3 to 6 months. And when you look at the company's immediate future, the picture starts to look a whole lot more cautious. This is where the two stories really start to pull apart.
So here's what was really weighing on the stock. Investors kind of looked right past that long-term AI strategy and honed in on the fact that Albertsons narrowed its guidance for the full year. They also heard management admit that the competitive landscape is getting tougher, especially around holiday deals, and they flagged a new headwind coming from government policy.
The guidance was the real problem. The company tightened up its full-year forecast for both identical sales and adjusted EPS. Now, for investors who are looking for signs of strength, narrowing your forecast range like this, it signals caution, not confidence. It's a yellow flag.
And here's that policy headwind we mentioned. There are new drug pricing rules coming down the pike from the Inflation Reduction Act, and they're going to reduce Albertsons' reported pharmacy sales. Now, management says this won't really hurt profits much, but it is expected to knock about 0.7% off their Q4 identical sales, and that's a pretty significant hit to the top line that investors just couldn't ignore.
That 6% drop on earnings day wasn't just some isolated event. To really get the depth of the market's skepticism here, we need to zoom out and look at how Albertsons has been performing over a longer period, especially compared to its peers and the rest of the market.
And this picture, well, it's pretty stark. Over the past year, Albertsons is down over 18%. That is dramatic underperformance compared to the consumer staples sector, which was basically flat. And it is a world away from the S&P 500's nearly 18% gain. So this isn't just a post-earnings dip, it's part of a much longer trend of investor doubt.
Okay, so we have these two competing stories, right? You've got management's long-term transformation plan on one side, and the market's very real short-term fears on the other. So what does this all mean for the next earnings call and beyond? Here's our take. Looking ahead, we're expecting the next quarter's results to be kind of weak, just given the challenges management has already told us about. Because of that, we don't think the stock price is going to do much of anything. It's likely stuck in a range. The story here is only going to change when their AI and productivity plans start to show up in the numbers, when they clearly protect or even improve profit margins.
And all of this leads us to our final rating, market perform. Now, what does that mean? Well, we think the company is running its business pretty well and their long-term tech strategy is smart. But the intense competition and these policy headwinds are basically creating a ceiling on the stock's potential, at least in the short term. At its current price, the stock seems fairly valued for the challenges ahead. For us to get more bullish, we need to see hard proof that their fancy AI tools are actually expanding their margins, not just lifting sales a bit.
Ultimately, it all comes down to this one question. Management is playing the long game, making a massive bet on technology and efficiency. But the market is impatient. So the central challenge for Albertsons is to deliver real, tangible proof from its AI strategy before all these near-term pressures chip away at investor confidence even more. It's a race against time.
And a final reminder, as always, this analysis is for informational purposes only. This is not financial advice.